Well, an important event for Infosys. Now, they had announced this buyback a while back, but yesterday they announced the record date. So, we'll give you the buyback math for Infosys at this moment. The buyback price is 1800 rupees, which is at a premium of 23%. Buyback size is 18,000 crore rupees, which is the highest ever that we have seen coming in from Infosys, and almost double the earlier two buybacks that we had seen. Record date is November 14th, which means that the last day to buy the shares of Infosys to be eligible to participate in the buyback is November 13. Whoever buys shares till November 13 will be eligible for this buyback. Now, the buyback size is 2.4% of the equity. This is not the highest ever. In 2017, they had bought back nearly 4.9% of the equity. Now, what is entitlement ratio? At this moment, the entitlement ratio for Infosys based on the second quarter shareholding will be for every 100 shares, minimum 5 shares will be bought back by the company. Entitlement ratio is the minimum number of shares that the company has to buy back in this situation. So that is for every 100 shares, every 5 shares is what the company will buy back. But what is in it for retail shareholders at this moment? Now, the portion reserved for retail shareholders is 15%, which means that around 2,700 crore rupees will be reserved for retail shareholders. And who are retail shareholders? Those who own shares worth less than 2 lakh rupees. So at the price of 1,466, 136 shares, whoever owns close to 136 shares will be a retail shareholder. And if retail participation continues to remain high, something similar that we have seen in the previous buyback for Infosys, the acceptance ratio could be lower at around 5%. And at a lower acceptance ratio of 5%, the actual gain for any retail shareholder will be very limited. So if you look at this calculation that we have done, for 5% acceptance ratio, the actual gain for a retail shareholder will be just 1%. If the acceptance ratio increases to 10%, then the gain will be 2%. For 20% acceptance ratio, gains stand at close to 4.6%. And if acceptance ratio is higher at around 30, 40 or 50%, then the gains could be anywhere between 7 to 11% for any retail shareholder.